Welcome to our channel. Today, we're diving into 9 crucial financial goals to achieve before turning 40. Your 30s are pivotal. The decisions you make now will set the stage for your financial future. Think of it as laying a solid foundation for a skyscraper. We're talking about real freedom and security. Hitting these milestones gives you options and reduces stress. Imagine entering your 40s with a clear path and resources. This is achievable with a plan and consistent effort. These goals build momentum. 9 goals might sound daunting, but we'll break each one down into steps. Consistency is key. Small progress adds up over time. Stick with me and maybe smash that like button. This information could change your financial trajectory. Let's get right into it. Alright, kicking things off with goal number 1, building a fully funded emergency fund. Save 3 to 6 months worth of essential living expenses. Essential means rent or mortgage, utilities, food, transportation, insurance premiums, and minimum debt payments. This fund is your financial first aid kit, your ultimate safety net when life decides to throw one of its inevitable curveballs. Without it, you're walking a tightrope without a net. Think about what constitutes a real emergency: job loss, sudden medical bills, or major home repairs. These aren't just minor inconveniences, they are significant, often costly events that can derail your entire financial plan if you're not prepared. This fund is there to absorb those shocks so you don't have to panic. Start small, but be consistent. Automate a certain amount from every paycheck, even if it's just $25 or $50, into a separate, high-yield savings account. This money needs to be liquid and easily accessible, but not too accessible that you're tempted to dip into it for non-emergencies. The psychological benefit of having this fund in place is immense. It's not just about the dollars and cents, it's about the peace of mind. Knowing you have that cushion allows you to make clearer decisions in other areas of your financial life. You're less likely to make rash choices like cashing out retirement funds prematurely or racking up high-interest credit card debt when an emergency strikes. This is step 1 for a reason. It's the foundation upon which all other financial stability is built. Next up, goal number 2, aggressively eliminate high-interest debt, especially credit card debt. This also includes payday loans and some high-interest personal loans. Think of this kind of debt as a financial anchor, constantly weighing you down. The interest rates on these types of debt can be astronomical, often 20% or higher. When you're paying that much in interest, it feels like you're running on a treadmill, making payments but barely making a dent in the principal. There are a couple of popular strategies for tackling this beast: the debt snowball and the debt avalanche. With the debt snowball, you list your debts from smallest balance to largest, regardless of interest rate, and make minimum payments on all but the smallest. You throw every extra dollar at that smallest debt until it's gone. The psychological wins from knocking out debts quickly can be incredibly motivating. The debt avalanche, on the other hand, has you list debts by highest interest rate to lowest. You make minimum payments on all and attack the one with the highest APR first. Mathematically, this saves you more money on interest in the long run. Pick the one that you'll stick with. Consistency is key. Imagine the sheer liberation of freeing up that cash flow every month. Once those high-interest debts are paid off, all that money you were pouring into interest payments can now be redirected. This step is crucial for building genuine financial peace. Goal number 3 is all about building and maintaining a high credit score. Aim for a score ideally above 740. A strong credit score can save you a fortune over your lifetime. It's the key to qualifying for the best mortgage rates. Pay your bills on time and keep your credit utilization low. Check your credit report annually and dispute any errors. Set up automatic payments to avoid late fees. Chapter 4. Future-proofing your life, maxing out retirement contributions. Goal number 4 is to max out, or at least significantly ramp up, your retirement contributions. This means consistently funneling money into your retirement accounts or other retirement schemes and contributions. The earlier you start, the more powerful the magic of compound growth works in your favor. Time is your single greatest ally when it comes to retirement savings. One of the biggest no-brainers in personal finance is taking full advantage of any employer matching retirement contributions. If your employer offers a match, you absolutely must contribute enough to get that full match. Not doing so is literally leaving free money on the table. Beyond the employer match, aim to save at least 15% of your gross annual income for retirement. This includes your contributions and any employer match. Breaking it down per paycheck can make it seem more manageable. The power of starting early in your 30s or even better your 20s cannot be overstated. Understand the basic difference between traditional pre-tax contributions and Roth post-tax contributions. With traditional accounts, you get a tax deduction now, your money grows tax deferred, and you pay taxes on withdrawals in retirement. With Roth accounts, you contribute with money you've already paid taxes on, but your qualified withdrawals in retirement are completely tax-free. The most important thing is to start contributing consistently, even if it's a small amount, and increase it as your income grows. Chapter 5. Laying foundations. Buying or planning for your first home, if it's your goal. Buying your first home is a major goal for many. It's a significant financial commitment. Start by deciding if homeownership is right for you. Save for a down payment and research your local market. Consider all costs and avoid becoming house poor. If it's your goal, start planning now. Chapter 6. Expanding your horizons. Creating multiple streams of income. Creating multiple streams of income is vital in today's economy. Relying on a single paycheck is risky. Layoffs, reduced hours, or industry downturns can happen. Diverse income sources provide a safety net. Explore side hustles, freelance work, or passive income. Start small and align with your interests and skills. Even a few extra $100 can make a difference. Chapter 7. Growing your wealth. Consistent investing and net worth tracking. Invest consistently to grow your net worth. Saving is crucial, but investing helps outpace inflation and build wealth. Diversify your portfolio to manage risk. Stocks, ETFs, mutual funds, real estate, and bonds can all play a role. Consistency is key. Use dollar-cost averaging to invest regularly. Track your net worth regularly to stay motivated and ensure your financial plan is working. Chapter 8. Your financial armor. Securing proper insurance coverage. Goal number 8 is absolutely critical: getting proper insurance coverage. Think of insurance as your financial armor. You've worked hard to build your assets, save money, and pay down debt. Insurance is what protects all of that and your family's well-being from unforeseen catastrophic events. Without the right coverage, one major accident, illness, or disaster could wipe out years of financial progress. There are several key types of insurance that most people should have in place by their 30s. Health insurance is a non-negotiable. Medical costs can be astronomical. Life insurance is crucial, especially if you have dependents. It provides financial support for them if you were to pass away unexpectedly. Disability insurance is often overlooked but incredibly important. It replaces a portion of your income if you become disabled and unable to work. Then there's insurance for your property. If you rent, you need renter's insurance to cover your personal belongings and provide liability protection. If you own a home, homeowner's insurance is required by lenders and protects your dwelling, personal property, and offers liability coverage. Auto insurance is a legal requirement in most places and protects you financially in case of an accident. Being properly insured is a cornerstone of a sound financial plan. Chapter 9. Charting your course. Creating a long-term financial plan. Create a comprehensive long-term financial plan. Set clear, specific, and measurable goals. Your financial plan is the blueprint for your future. Without a plan, you're navigating without a map. Review and adjust your plan periodically. Be the architect of your financial destiny. So there you have it. 9 crucial financial goals to crush before 40. Reaching these milestones transforms your relationship with money, building a future with more choices and less stress. Start today, even with small steps. Consistency drives results. Thanks for watching. Like, subscribe, and hit the notification bell for more tips. See you in the next video.